If you're interested in learning more about how to learn the ins and outs of these strategies, get some insider tools and tips, head on over to the link, sign up. We're going to keep moving on to AJ's pick of the week. This is a name that we covered last week, which AJ seems as if we got some follow through, some potential. And so your pick of the week is a place where I will take a first date, the Cheesecake Factory, ticker symbol CAKE, cake.
Yeah, this was from Carl last week from Lincoln, Nebraska. Carl, I got to give you kudos, man. I really, really like this symbol for a couple of different reasons. Um, so not only that, I want to just preface this is actually one that we focused on yesterday at our, my program participants workshop. We really took this one apart, and so I really got familiar with cake. So first of all, this is in the restaurant sector. So what I've done is I've looked at the restaurant sector compared to the broad market. Remember, we've got a lot of from the beginning of the show, some cautious optimism, possibility for trend reversal quite easily in the broad market. And so the restaurants, when I overlay, the sector to the index, the restaurants kind of follow to the beat of their own drum. They're a little bit more of a consistent move of a sector than the broad market, which is heavily, if you're looking at the S&P 500, heavily cap rated to the Magnificent Seven, which are mostly all just tech plays. So I feel a little bit more comfortable with a range bound strategy on a restaurant. Again, like we've been saying for the last 2.5 years of this show, Sip, it's always the boring symbols that I wind up turning into income generators, right? And so, one thing I like about Cheesecake Factory is that they're giving dividends to their shareholders. They've got great earnings every earnings season. They're never dipping into negative. I mean, this is a company that has this recipe. We talk about recipes for trading strategies. There's also recipes for how to run a good company, and Cheesecake Factory seems to be following that recipe. Just as a comparison, they're not giving all you can eat shrimp deals like Red Lobster is and putting themselves out of business at one of the highest commodity prices out there, where people come in and spend 5 hours eating all their shrimp. No, Cheesecake has it down pat. So okay, enough blowing air up the executive that run Cheesecakes factories. But looking at the pattern, they're in a nice sideways chop. You can see that we put we've identified some support and resistance here. You also notice that it's kind of diverging, meaning every time there's bottom reversals and top reversals, we're seeing it get a little bit wider. I'm not so concerned about that. The theme for the last 3 or 4 weeks has been we've been cutting down some of our duration of our trades. So that might be something that, even though I've, said the restaurant sector is a little bit better than the broad, there's correlation throughout the market. So maybe instead of planning out for a 5 or 8 month trade, we plan out for, staying in this trade for a couple of cycles. But here's what I'm looking at. I'm looking at that we're currently in the middle of the channel I identified. So, some of us took the signal. If you were watching it from Carl last week, you took that signal and you got yourself some kind of covering position in here. If you're legging into a strategy like we like to do, you got yourself into a covering position. Either you shorted it or you found that back month option that worked really well. And there were some good back month options that had some nice liquidity. We're talking out 8 months. We're talking deep in the money. So if you're in that shorting position, then you're going to be patient. We're waiting for that bottom reversal. We're waiting to put some distance between, at what price you shorted or bought that put at. And you'll go ahead and sell yourself some put premium, buy yourself a protective call 3 to 6 months out with a strike up here. And once you put on those two trades, the premium trade that you use to offset the call, the protective call purchase, you basically bracketed it and that position will auto adjust, right? That means that if it stays in the channel, great. You'll do it the next cycle. You'll do it over. You'll repeat but if it goes out in either direction, we've put enough distance between the covering position and where we sell the premium that it's going to be a really sweet trade, whether you get exercised or whether that protective call kicks in. So, get that range trade, get the second half of our premium position, get that married protective option in there. I think you're going to be really happy. Now, if you didn't take Carl's suggestion last week and you missed the opportunity to set up your covering position, then my other thing is, and again, today's big conclusion is we need to be patient and wait for the next reversal. But as we come back down closer to this $37 mark, we'll wait for that reversal, and you can set up a covering position on the opposite trade. Now, the calls are not as liquid when we go far out of time, so I'm not going to recommend that you buy, use any sort of option substitute here. If you're going to do this, you're going to do buying the stock, which isn't a bad thing for the long term if you want to, set yourself up for collecting dividends down the line. But you're going to buy the stock in lots of 100, and I really like this. I'm really glad that Carl turned it on to us last week. I'm glad that we hashed it through in my program, because I'm resonating more with, one of these cheesecake trades. Again, under the radar, boring ass stock, unless you take your first date there or anything. But definitely one that we could turn into one of these theta decay plays. But again, a correlation, uncertainty. Maybe we, use strike prices that are a little bit more bound. Maybe we don't go all the way to the reversal signal. Instead, we use either a trailing signal or some sort of like just a delta between where we did the covering position. Something, we can tighten up and make it a little bit more conservative trade. Not a problem there. So that we, favor immediate profits over having a trade that has a potential to go longer. I'm cool with that. But yeah, you guys should all check out Cheesecake Factory.
And the earnings are on the 29th, which is roughly 3 weeks out.
So yeah, I'm curious what
do you see anything, or like when would you even start considering a play in cake?
Yeah, this is actually a pretty interesting play, because typically I would very, very seldomly put on like an income trade and carry it through earnings. But that said, looking at this one, the ones that expire next week, I don't know. I like a really broad range, and I don't think that I could sell strikes far enough from the money to get enough premium. So we would be forced to hold a position going into and through earnings. But the magic is that the implied volatility of the November 15th expiration is already really elevated. I mean, the historical volatility is 36.5. I can sell the 35 puts at a 45 volatility that expired November 15th, and the 42 calls at a 38 volatility. I can bring in, I can sell both of those at 60 cents at least, probably squeeze another nickel out of there, get $1.25. And that's basically like the range for the past 3 months. I think 42.70 something, 42.82 might be the all-time high. It's definitely the high for the last 6 months. And the thing is that the earnings gaps that Cheesecake Factory typically experiences really aren't that big.
No.
May 8th of 2024, we get a 7.5% earnings gap, and that's the biggest one in the last 3-4 years. So, I actually kind of surprised myself in liking this one.